really quickly, I'm going to explain how I took this TradingView paper trading account from 100 grand in July of 2020, and now it's about mid-August, and it's worth $135,000 in virtual money. I cannot spend it. It is not real money. It's video game points. I guess you could think of it like that. The most important thing that you're going to want to pay attention to with this is that I'm winning for twice as much that I'm losing. So I am losing 500. I lose, rough, give or take 500, maybe 1,000, and I'm winning either 1,000 or 2,000. So it's like different ways of doing risk management, but we're going to circle back around to this later. I just want you to take note, and also take note that I'm losing more than I'm winning, and yet I'm still increasing my portfolio size. I did have a winning streak, but let me show you what I did and what indicators I'm using. So the first indicator I'm using is Ichimoku Cloud. It's a really ugly indicator, but I'll show you how to make it look better. The second indicator that I use is the ADX. Now, it's called the DMI in TradingView, but or the average directional index is the built-in version. But I need a line built into it that is measured at the 20 line, and I'll show you why here in a second. So this one right here, I'm just going to put a star next to it. It's in the public library. We're going to add this, and then we're going to customize it right here. We're going to make this 20 line be bright red, and we're going to make it be very incredibly obvious the spot. And we're going to take out the DI, and we're going to make this ADX yellow, large, and I like columns. So let's choose columns, and there we go. Ichimoku, let's style this. I normally take off these two lead lines. I increase the color of the cloud, and then I increase the size of the baseline and the conversion line. Then I'm going to take this lagging span and make it yellow. Okay, so it's still really ugly, but the way that I want you to look at this is three things. First one being this cloud, second one being the lines next to the price, and the third one being this lagging span, which I'm going to just call a lightning bolt, just because we have clouds, and it kind of looks like a lightning bolt. So what we are going to do is we're going to find a couple of trade setups, and then you're going to see how I set them up, and then we'll look at some of the trades that I've taken, and just to give you an idea of how I was able to do this. So in this case, the first rule that we have is this ADX has to be above this 20 line. So this is obviously a no. This one would be a yes, except the second rule that we have that's being broken right now is that these price bars are too far away from these lines. These lines are like a trampoline that the price bars will bounce off of, okay? And so I want to buy low and sell high. Well, I want to buy it when it's close to the trampoline, but after it's bounced on it and started to move up. So that disqualifies this one. Same with this one. It's just it's already bounced up, and it could keep going up. It's just a little bit risky, and I would like to get a better price. This one, ADX, disqualified it. Same with this one, ADX disqualified it. This one doesn't have cloud data, so I can't trade that one yet. The ADX is qualifying this trade. Now let's go over some more criteria. So it's come down, bounced off of this line, and started to go up. We have this little area right here, which is serving as kind of like a ceiling to keep that price from bouncing back up again. So I'm a little concerned about that, but the lightning bolt right here is above the cloud, and it's above these price bars. And so here we go, one right here. This price bar is being above the cloud, that's two, and then three, it's bouncing above these trampoline lines, or whatever you want to see these as. It's bouncing above it, right? And then finally, fourth, this lightning bolt is above the cloud and above the price bars. So yeah, we could place a trade. I think the reason that I wouldn't place this trade is because when these lines go straight, that's not a good sign. That's kind of like stalling out, like the monitor is dying and it's fallen down to this line, and then it's not breaking above this line. So it's a little bit troubling, but let's go ahead and just accept this because this is a decent trade. So first thing I'm going to do is I'm going to use a trend-based fib extension, and I'm going to find kind of like where it's last bounced at, right? So it came up and then it came down and bounced on these lines, then went back up, and this is the highest that it's gone, right? Then it came back down and bounced again. So I'm going to say this is my lowest local low, and by lowest local low I mean it's just kind of in the neighborhood, right? Here's some stuff. Here's some stuff from before. I don't really care about that. So I come down here and I say this is my lowest low, and this is my highest high recently, and then here's my next lowest low, and it creates all of these numbers that we can use as take profit points. So then I'm going to go and I'm going to choose long position because since we're above the cloud, that's considered long. You could do a short position if it's below the cloud, and your exchange would allow it. Now, one thing I don't like about this is it's already starting to turn down, and I would like this to be moving upward, right? So, but I'll go ahead and just click on it anyways and add a long position, and then this is what is fantastically awesome. This is where I'm going to sell at a loss, right? Well, I can use this line, this red line right here, as my place where I say I'm going to get out if it comes down to this line. Second line, I could use this cloud, right? So I could just bring it down and right about there. The third place I could do is counting 8 candles back. What's the lowest that price has been in the past 8 candles? So these bars are 1, 2, 3, 4, 5, 6, 7, 8. The lowest one was right here. Now I'm going to put a little line right there and say this is the lowest that it's been in 8 candles, right? Well, I can also bring this down to here, or I can bring it down to here. And it's just subjective. It's just whatever makes you feel comfortable when you look at it. So I'm kind of just eyeballing it. I'm saying, you know what? If it goes, how about like right there? It goes below this line, give myself a little bit of wiggle room, and now I pull this thing all the way up until this number right here says 2, okay? Right about there. Now, here's what I noticed. This line says 100%. So maybe what I'll do is I'll say, hey, how about I bring this down to 100, right? And now that this says 1.84, well, now let me pull this up until it says 200 or 2, right about there. And it's right on that line. So that's crazy. That means that the odds of it hitting this line are probably going to be more likely to be filled because of the fact that the Fibonacci numbers might act as a ceiling that will prevent the price from going up any further. And that one's done. So we go to another one. Let's do the same thing, play the same questionnaire. So this one's below the ADX. This one's below the ADX line. This is below the ADX 20 line. Here's one. Now this one is just a little bit far from this line, but we could take this as a trade because it does meet our criteria. The only reason why I wouldn't take this as a trade is because there's long wicks that go down. And so let's just have some fun really quick and say, what if we were to take a long position and drag this thing all the way down to this little line right here, right? That's below this last wick right here, bam. That would mean that in order to turn a 2-to-1 profit, because it's at 0.23, keep it going all the way to, that's crazy. So in order to profit on this, it would need to be a 56% trade. That's crazy. And a 28% loss. We've got a really great trend going on. And I think the odds of it going up there are a lot more likely because as you see in the past, it'll just take off. And that's what it's doing right here. And so while it may be funny to actually do a trade like that, this very well could go up to 56. And that's what's funny about this is cryptocurrency is incredible in that you can take a small amount of money. For instance, let's say we were to actually take this trade right now. So this is me doing the paper trading. I would say market because I'm ready to buy right now. And what this would mean is, in order to risk 1% of my account, which is currently at like $135,000, then I'm willing to risk 1,371 in order to make 2,732. But the amount of money that I'm actually putting in, so if this is at a 28% decrease, would mean I would lose $1,300. What I can do is I can say times 0.28, and I can say how many. Okay, so I would have to put in 10,000 to get 28. What about 5,000? So I would have to put in right now $5,000. Okay, and if it wins and it hits 56, right? Then I get $2,800. Right? So I'm going to leave that there. We're going to go to another one. Here's another one. Let's do, this one looks good. It's near our little bouncing trampoline line, and it's angled upward, which is good. Right now our lightning bolt isn't touching any of the clouds or price bars, and our ADX is above 20. Let's take this trade. So I'm going to first and foremost find the most recent local low. Okay, I'm going to click right here. It does not have to be perfect. This is not for precise measurements. What we're doing is we're interested in getting a line that could influence us to take this long position tool and get it close to something. And let me explain that. So right here, this red line looks great. I will sell if it hits this red line, and I am anticipating a 2-to-1 trade, right? So there's 2-to-1 right there. And it's at this 50 line, in between the 50 and the 61.8. It's 31.92%. That's crazy. And so this is what I wanted to demonstrate was, let's say if we were to create a, oh yeah, I can't trade Tether with paper trading. That's okay. Let's find another example. This is below the ADX, so we couldn't trade this. This is just really far away from the lines, but the criteria otherwise, this is looking good. It's above the ADX 20 line, lightning bolt. It's above the price bars, and we are above the cloud. It's just really far away from these. It's just really far away. This one is below the ADX. Can't take that. This one is nearing below the ADX. It does meet the criteria, except it's starting to go down, and it just doesn't look all that delicious, if you will. Here's what we're going to do is we're going to put the trend-based fib extension. We're going to go, let's say this candle right here, it was above the cloud for 1 day, 2 days, went back down, came back up. So this was really when the trend started. So then here's the highest point of that trend, and more or less right about here is where we came down. And then we go and we add right about here a long position, and now I can do one of two things. I can either put my stop loss at the red line, but it's got a bunch of wicks. I'm probably going to get kicked out of the trade, and it's going to go up. I don't want that to happen. So here's what I'll do. 1, 2, 3, 4, 5, 6, 7, 8. In the last 8 candles, the lowest candle value is right here. So let me put a little ray line right here, which is also in line with the lowest low right here. This line, that's actually looking good. I could use that, and if I wanted to, I could put it right here on the flat end of this cloud, or I could put it just below that line, just in case, right? So then I'm going to grab this and bring it right up to 2. And what's interesting is I've got this 78.6 line right here, and also we've got our highest high right here, and then the 61.8 line. So maybe what I might do is instead of putting my take profit line right here, what if I bring this down to the 61.8 line? And let's say I want to get this really exact. Well, I would turn on this magnet tool, right? And I would grab this, and it would lock up to the exact levels that I want. Okay, there we go. So I did get a little bit of wiggle room on that, and it moved it up just a little bit like that. Okay, so now it's 1.58, meaning I need to reduce my stop loss right there. And look, that's right there on the base of that cloud. So I'm willing to risk $1,000, let's say, to make $2,000. Here's what's interesting. The last time I had to put in $5,000. This time, in order to risk 1%, let me do this. So it'd be about like 13, let's say 1350. So we would say 0.07. I'd have to add isn't that crazy? I'd have to add so much more money in order to trade this at a, let's say if it goes 14%, right? 14%. In order to make $2,700, that's how much money needs to go in to take a small percentage trade like this. But at the end of the day, I'm still going to be losing around $1,000, and I'm still going to be gaining around $2,000. Now, if I decide, hey, you know what, I want to do a 3-to-1 right here. 3. Look at that, that's crazy. 78.6 is right there. And so maybe I might not do a 3-to-1, maybe I'll just move it up to the 78.6 line. And that's 20% from where it currently is right now. And so what that means is if I'm willing to lose, let's say $1,000, let's go back to this math, and we'll say 7%, so times 7%. So I'm willing to lose 1,000, for instance. So I would put in $15,000 into the market, and I'm willing to lose 1,000 right now in order to get 20%, which is $3,000. And that's the mentality, is the amount of money that I put into this trade. It could be $5,000 or it could be $15,000. It's all dependent on the percentages that it's going to increase or decrease. Smaller percentages require more money. Larger percentages require less money. This bounced off of here and now it's going up, and the criteria is great. Here's what's crazy. This is these are huge percentages. I mean, this thing skyrocketed 500%, and now it's still going up. So I'm just kind of blown away that we've come from way down here all the way up here. So I'm a little bit sketched out by this, and I would anticipate this to have a pretty lengthy fall. If it were to come back down to its original levels, it's scary. So that's definitely something to keep in mind. But this does meet all of our criteria, except it's just a little bit too far away from our lines. And so let's just do it because it's meeting our criteria. And let's say this is our lowest low. How about we just say, any one of these is fine. Let's just do right here. I'll say right here, right here. Do you see I don't even have magnet on. I'm just clicking on it. I just want to get some rough levels. I'm eyeballing a lot of this stuff. I'm not measuring this really religiously so much as I'm just trying to get the trades right. So in this case, look, I could use this last lowest low right here, or I could use this red line right here. Since it's so volatile and it's just moving and whipping back and forth, yeah, let's see what that would bring us to. So there's 2 to 1 right there. What does that give us? Oh, that's right by the 61.8. But maybe there's some way that I can get it to come down. How about right about here? That's where this green cloud line is, okay? And it's just below this lowest low. Can I get this down to the, yep, look at that, the 141 line right there. You see, I'm eyeballing it, and this probably isn't even snapped exactly to price, but it just gives me an idea of what options I have available. And here's what's crazy. Look at this. 21% decrease, right? 43% gain. So if I come in here and I say 21, maybe 22, so times 0.22, I want to lose 1,000 right here. So I could put in like 4,800 maybe 4,700. Okay, so like 4,600. So right now I would put in, let's say I didn't have 100 grand. Let's say I only had $10,000. I would put in right now $460, right? And so if I put in $460, I am willing to lose $100 because I'm just dropping off that zero, right? Let me close that. I'm willing to lose $100, right? I'm going to put in 460 right here, and I'm going to lose $100 if it goes down and touches this line right here. But if it goes back up to 44, I'm going to get $200. But it has to go all the way up here, and it cannot at any point in time come down and touch that line. This one, I didn't feel comfortable taking this trade because it came up really fast, and then it came back down to test this, and then it came back down, and then it started to come back up. And here's our lightning bolt. It went back down into the cloud, and then it popped back up, and then it hit this ceiling right here. And so my eye is really glued to this level right here, and I want my trade to go past that. I don't want it to be something that is, going to be blocking it. And so my next levels that maybe I would be looking at would be, these are like ceilings, if you will. So right about there, it's another ceiling, right? And so I'm going to take these all into consideration. And yeah, it's bounced back up. Ideally, I would have wanted to get it down here, and my stop loss would have been down here. And so, but let's do our trend-based fib extension, and here's what we can say. Right about here, we started to change directions. So we'll say right there was our low, there's our high, and then here's our higher low, right about there. And so as you can see, look, this 127 line is kind of in line with our last high. The 78.6 line is in line with our last local high. And here's what we're going to do. We're going to grab the long tool, and I'm just going to click right there. And I'm going to, let's use the cloud, maybe just a little bit below it. And we'll use this, see this green cloud right here? We'll use that because I want to give it a little bit of breathing room. I want it to be able to come down and still continue to go up. So now I'm going to make this 0.86 go to 2, looking at this number right here. And there's 2 right about there. Okay. So that looks pretty good. In fact, if I wanted to, I feel pretty good about that, right? And so this is only 6% down and 12.84% up. Now, if I were to lose, let's say $1,000, then I would say this, 0.6. I want to lose $1,000. So I would have to put in $17,000 into this market in order to lose $1,000 and gain $2,000. If I drop the zero off on that, I had $10,000 for this trade right here, I would have to put in $1,700 in order to make $200. I would lose $100 if it came down and touched that cloud. This one is below the ADX. This one's above the ADX, but I have to use this because this is a recent addition. So now that we've got a cloud, I would not buy this because the lightning bolt is in the cloud. I would not buy this because we are below these lines that we want to bounce over, bounce on, and I would buy it if it came down here and started to bounce back up. The only problem being is that the lightning bolt would need to be above price, and the ADX would probably start decreasing below here, so I would not anticipate buying this. This one would be a buy. Ideally, I would have wanted to have caught it right here instead of up here because it bounced and then it started to come back up, right? So here's what I'm going to do. Here's our low most recently. I mean, I could have used this low down here, but that's okay. As long as I just get some lines going on. Then I'm going to do a long position. I'm going to click right there, and then we're going to use this red line as where we're going to sell if it comes down. Now we're going to increase this to 2. Right there, it says 2. That's 17%, and it's right above this 141. If I really wanted to tighten this up, then I could make it come down to 140, 140, and bring this to say 2. See how I did that? It's crazy how when you move this by a tiny little bit, or where you place your trades. If I would have placed my trade down here, well, let's say I bought it like right about there, and I made my stop loss right there. Well, then I only have to sell it up to this point to make this a trade. But because I showed up late to the party, my trade looks like that. I hope this helped. This is genuinely exactly what I've been doing. There's probably something that I didn't mention, and that is what happens when it crosses below the cloud and goes in the other direction. Well, I'm going to do the same thing, just in the inverted direction. So I would be betting on it going down, and it would work in the same way, except I would be shorting the market. And usually when it's going up or going down, for instance, like right here, it was going down, and then guess what happened? I would have lost some trades right here. And then it comes out and just right about here, you can see we're going back in history. I'm going to speed this up just a little bit. Okay, so it's been above the cloud for 1 candle, 2 candles, 3 candles it's been above the cloud. The only problem is the lightning bolt is trapped inside, right? So let's get that lightning bolt out and we'll be able to take a trade. Now, the only thing that's preventing us from taking a trade is the ADX. Right here, we can take a trade. Let's see what would have happened. Click on that, bring it right here, make this say 2 to 1, risk to reward ratio. Oh my gosh, it didn't hit it. It hit it. I need to accept that as a losing trade, and here we go. Now in this case, the lightning bolt is touching the price. The ADX is looking okay, but now lightning bolt is in the price. I don't want to buy that right now. I want the ADX to get back above 20, and I need the lightning bolt to be above the price bars. Okay, so here we go. Now I could take this, except I want to see it be above the cloud, so 1, 2, 3 days. I could take this as a trade if I wanted to. It's just it just now got out of the price bars, but let's see what happens. Okay, so maybe I should have taken that trade, right? Let's just say we were looking at it and we did take that trade. Right here. So let's move it forward one. Let's take that trade. So we'll take our fib-based extension tool, and the lowest local low would be like right here. Then the highest high would be right here, and the highest low would be like right there. So we would take this trade, and I would click on this, and I would make the lowest low probably right where this crisscross is happening, and it's also the lowest low right here, which means that I'm going to bring this to be 2 to 1. Where does that put us? Puts us at about 14%, and let's move it forward and see if we would have won that trade. We would have won that trade immediately. Isn't that crazy? So, and it keeps going. That's nuts. Okay, so right here, it's really far away from the cloud, but it's touched down on it. And how about right here to right here to right there? I want this to be 161.8. And wow, I mean, it's so freaking, that's just really far down. I would use this 23% line right here, this red one. I would just use that as my stop loss, because I mean, that's just so far. I'm not really trying to have my 2 to 1 ratio be super far away, but let's see what happens. There it is. Lots of fun, huh? So I could just scroll through a couple more markets, but you get the idea. Look, it's technically above the ADX, but the lightning bolt is about to touch price, and I don't like that, and I don't like that there's wicks. That's just not a safe trade for this style. This one is below the ADX. Let's find some more. This is above the ADX. It's just really far away. Also just really far away, but I mean, honestly, oh, and the ADX. It's just really far away. Okay, so this one would be a short. And the way that we would do that is we would just like this, we would say trend-based extension, came all the way down to here. You wouldn't touch that. I mean, is it really anticipating on going down? That would be crazy if it did. It just takes a nosedive. Well, let's set it up. We'll finally do a short position. We'll call it a day. So let's bet on it going down. And our last low will be this cloud right here. And we're going to anticipate it going. Oh. Pretty much there. And it's this last low. And it would be the 23.6 line. And so if I wanted to, then I could just base it off of this and bring that down there. And then bring this back down to 2 to 1. See how that worked? And it's kind of playing off of this last local high right there. There you have it.